an AI tool reviewed this company's books 3 times, flagged nothing. Then Dave, the actual accountant, looked at the same numbers for 20 minutes and found a $40,000 mistake buried in a vendor account that would have triggered an IRS audit 8 months later. The AI wasn't broken. It did exactly what it was built to do. It just wasn't built to notice the one thing that mattered. Accounting has this reputation as the poster child for AIs coming for your job. Spreadsheets, numbers, repetitive entries. Sounds like exactly the kind of work a machine should eat for breakfast. And a huge chunk of it already has. But the actual answer to, is accounting safe, turns out to split right down the middle of the profession, and the split isn't where most people think it is. This is part of a series where we run a job through the same 3 questions every time. Does it need you physically present? Does it carry legal accountability that has to sit on a real person? And does it require improvising through a messy situation nobody wrote a manual for? Accounting is the most interesting test case we've run so far because it's the first job where the answer to all 3 questions is genuinely, it depends which part of the job you're talking about. Let's not soften this part. Basic bookkeeping, categorizing transactions, reconciling bank statements, matching receipts to expenses, is already substantially automated and has been for a few years now, quietly, without much fanfare. Tools built into modern accounting software will read a receipt, guess the category, flag the match, and post the entry faster and more consistently than a person doing it by hand ever could. Tax prep for straightforward returns is heading the same direction fast. If your financial life is one W-2, a standard deduction, and nothing unusual, software can walk you through the whole thing without you ever needing a human to look at it. That's real, and it's not coming. It's already here, sitting in apps a lot of people already use every April. So if Dave's entire job were enter numbers, categorize them, file the form, this would be a short, sad video. That's not actually what fills most of his week, though. And that gap between what people assume an accountant does and what the job actually is turns out to be the whole story. Here's the piece that changes everything, and it's not really about intelligence at all. It's about accountability. When a company's financial statements get audited, somebody has to sign their name to an opinion that those numbers are accurate. That signature belongs to a licensed CPA, and it comes with personal, professional, and sometimes criminal liability attached to it. If the numbers turn out to be fraudulent and the CPA signed off anyway, that's not a bug report filed against a software company. That's a real person who can lose their license, get sued, or in serious cases, face charges. No AI tool signs that opinion. Not because it couldn't technically generate one. It's because nobody's built a legal framework where a piece of software carries personal liability, and it's genuinely unclear anyone ever will. For the same reason, a robot doesn't get a medical license to perform surgery unsupervised. Society built the entire regulatory structure of auditing around the idea that a specific, identifiable, accountable human has to stand behind the number. This is exactly the same wall we ran into with electricians and plumbers in an earlier video, a wall of licensing and liability, not a wall of raw capability. The tool can do 90% of the analysis. It still can't be the one who's accountable when something goes wrong, and it turns out that last 10% is the entire reason a senior accountant gets paid what they get paid. Let's go back to Dave's $40,000 find because it's a perfect example of the second wall. Not liability this time, judgment. The mistake wasn't a simple typo an algorithm should have caught. It was a vendor payment that had been coded correctly, matched the invoice correctly, and passed every automated check, except Dave happened to know that particular vendor had been acquired by another company 8 months earlier, and this specific payment was going to an account that technically shouldn't have existed anymore under the new ownership structure. That's not a math problem. That's context nobody typed into any system, sitting in Dave's head because he'd had a phone call with that vendor's old finance team the previous year. This is the pattern that shows up over and over in real accounting work. Fraud that's disguised as a normal-looking transaction, an unusual client situation that doesn't match any standard template, a new tax law that just passed, and nobody's entirely sure yet how it interacts with an older rule still on the books. AI tools are excellent at flagging things that look statistically weird. They're much worse at understanding why something that looks completely normal is actually wrong, because that requires outside context the numbers themselves don't contain. And fraud, specifically, is designed by people to look normal. That's the entire point of committing it well. Catching it often depends less on pattern matching and more on a very human kind of suspicion. The accountant equivalent of a gut feeling that something doesn't add up, even when, on paper, it technically does. There's a third piece to this that has nothing to do with numbers at all. A big part of what a good accountant actually sells is calm in situations where the client has none. Picture a small business owner who just got a letter from the IRS. It doesn't matter how good the software is. That person is not opening an app right now. They're calling Dave, and what they need in that phone call is not just correct information. It's a person who can say, in a steady voice, "I've seen this exact letter before. Here's what it actually means. Here's what we're going to do, and here's why you don't need to panic." That reassurance is a real service, and it's one an interface has a genuinely hard time replicating because trust, in moments of financial fear, tends to attach to a specific person, not a product. This shows up constantly in small business advisory work, too. Decisions about whether to expand, hire, take on debt, restructure. Clients aren't just asking for the correct answer, they're asking someone they trust to sit with them while they make a scary decision. That's a relationship built over years, and it's a genuinely different product than accurate calculation, even though both get bundled into the same invoice. So, running accounting through our 3 questions. Does it need physical presence? Not really. And that's the one area where this job is genuinely more exposed than a plumber's. Does it carry legal accountability? Overwhelmingly, yes, for anyone doing audit or tax signing work, and that single fact protects a huge share of the profession almost by itself. Does it require judgment in messy, unpredictable situations? Constantly. Fraud, new law, unusual client circumstances. Verdict? Half safe. The entry-level, data entry layer of accounting is already gone or going fast. The licensed, judgment-heavy, client-facing layer is some of the most insulated work we've looked at in this entire series, right up there with the trades. If you're already in this field or thinking about entering it, the takeaway isn't accounting is doomed or accounting is bulletproof. It's narrower than that. The ladder just moved. The bottom rungs, the ones that used to be how a 22-year-old learned the job by doing thousands of repetitive entries, are thinning out fast. The rungs that are left reward exactly the things that are hardest to teach quickly: judgment, client trust, and a willingness to be the person who signs their name to something and means it. Dave sent that $40,000 catch to his client in an email that just said, "Found something, give me a call." No software flagged it as urgent. He just knew. Next time, we're running a completely different job through the same 3 questions, and this one might surprise you even more. Subscribe if you want to find out which one.